How is everyone doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today, I wanted to talk to everybody about compliance officers. This is a job that has been for now a while considered the most difficult job in banking. And I wanted to look at an article today that basically examined this and tries to understand a little bit about what is the demands on the compliance position and how can you potentially fill these roles. So let's jump into an article here from Bank Director, and this is titled Banks Are Struggling to Find Compliance Officers. It's written by Paul Davis, who is a contributing writer. So it gets in here and it says basically one of the hardest jobs in the banking industry keeps getting harder. Chief compliance officers are largely responsible for helping banks navigate a plethora of legal and regulatory requirements. They are often the executives who must meet with examiners to discuss areas that need improvement. The job's demands continue to intensify as regulators step up oversight in areas such as third party partnerships and overdraft fees, and as programs such as instant payments gain traction. These fast moving developments have led some staff to quit their jobs and leave the industry. An example here, Christopher Wilston. Yes, it's Wilston, the sixth, the president and CEO of Independent Bankers Association of Texas, recently shared a story on X, formerly Twitter, about a compliance officer who left an unnamed bank after she determined that it would be less stressful to work at the funeral home down the street. Literally, she would rather be around death and loss all day than deal with the regulatory burden, Wilston added in his post. It is an incredibly difficult job, and sometimes there's a lot of pressure out there on those officers, says Kristen Schaefer, who is a chief risk officer for 4.3 billion Fish Bank Financial Corp. And its subsidiary First Bank and Trust in Brookings, South Dakota. There's no shortage of work, and you have to have a good compliance culture and support from management to keep those people here, she adds. There's a lot of burnout, and understandably so. So, and then the article goes on here to say that it is a demanding role. So compliance teams are facing pressures that extend beyond the rising regulatory burden. The advent of a new October 2023 survey of 225 financial compliance officers conducted by compliance and risk platform Hummingbird found that 87% are constantly under pressure to increase efficiency. And it states in here, it's clear the compliance leaders are under more pressure than ever to create a program that performs at peak efficiency. Hummingbird's research team noted in its report, given that compliance as a rule must balance program efficiency with effective and consistent risk mitigation, there is a decidedly difficult task. Being asked to do more with less isn't easy when you must maintain a consistently high standard of quality. As a result, qualified candidates are in high demand. Bank Director's 2024 Compensation and Talent Survey found that more than a third of banks polled are preparing to hire more risk and compliance personnel. Last year, about a quarter said those positions were among the hardest to fill. More than half the respondents at banks with more than $5 billion in assets said they found it tough to fill those roles. So, I did do an episode on the 2024 Compensation and Talent Survey. So if you get a chance, go back. If you're more interested in learning a little bit more about the information in that survey, go check that episode out. But a couple of things, and I've stated this before in other episodes, is that compliance has changed in my 24 years in the banking business. It has dramatically changed. I think a lot of people would agree with the assessment that, if you go back to the 90s, and I'm trying to think of a good example here. So say you had a $500 million bank and have a couple branches, do a little residential mortgage, do some commercial lending, offer depository products, your typical kind of neighborhood community bank. And back in the 90s, that bank might have had they might have had like a chief, or not even a chief. They might have just had a security officer who also, handled security for the bank, but then maybe also handled compliance. And it might have been one person for the whole bank, like did everything. Or maybe they had two people. Yeah, maybe they split the role. Maybe they had one person handling security, one person handling compliance. I would say very few chief basically chief risk officers, chief compliance officers. That just wasn't, that was something that was a position that probably it existed at your probably top 25 banks, your much larger regional banks, but not something that would have necessarily been seen at like your more smaller local community banks. But as time has gone on, as the regulatory burden has really mounted, especially after the 07-08 financial crisis, especially when you had Dodd-Frank kick in. I mean, that just changed the entire landscape. Now, you can have a lot of banks. You can have your typical, I would say, billion-dollar bank probably has at least 5 or 6 people, if not more, working on compliance. You probably do have a chief compliance officer, or at the very least, you have like you have some type of a head of compliance. And there's so many things that they have to deal with. I mean, primarily, I think I want to say they're probably dealing with BSA, Bank Secrecy Act, and AML, anti-money laundering compliance. But then, if you offer residential mortgages, they got to help with making sure that is all compliance with, HMDA and TILA and everything else. And then you've got, commercial lending and the things that you have to comply with that, and then consumer lending and the things you have to be compliant with that. So it is a lot of stuff. And then on top of it, you're also worried about general fraud. You're also have the burden of the increase in SAR reporting, which is a suspicious activity report. You also have currency transaction reports. You have all of these different things they're worried about, and then, like I said, plus the regular everyday fraud. I mean, all the identity theft that goes on, and then you got to worry about wire fraud, check fraud, cybersecurity fraud. Like, it's a tremendous amount, and you do ask a lot of people in those roles, and that's why it is so demanding. And just like they said, there's no shortage of work, but you're also trying to make it an efficient and an effective, consistent risk mitigation. And you have to, and then you got to report that up to the board. The board is probably going to have a subcommittee, which is probably going to which I would imagine is going to look at compliance. They're going to be looking at a lot of your safety and soundness exams and other things going on there. And then let's go down to the second half of this article here, which is called filling the role. So it basically states that banks should keep several things in mind as they look to fill risk and compliance positions. It is important to consider the bank's long-term growth trajectory, says Brian Love, the head of banking and fintech at Trevelyan, an executive recruiter in King of Prussia, Pennsylvania. Banks on pace to cross $10 billion of assets need to be prepared for direct oversight from the Consumer Financial Protection Bureau and more scrutiny under the Federal Deposit Insurance Corporation. Banks would be well served to develop a deep bench. Replacing a chief compliance officer with someone in-house could be more economical than hiring from the outside. However, it is critical to make sure they are familiar with the complex framework that includes adherence to the laws and rules such as the Bank Secrecy Act, Know Your Customer, and the Truth in Lending. So I mentioned BSA, Bank Secrecy Act, but know Your Customer. That is on. For anybody who's not familiar with that, that's a depository side thing. You have CIP, you have KYC, and you have EDD. We love our acronyms in banking. That is for sure. And then it goes on to say here, basically, First Bank has promoted employees from other departments, including mortgage processing, retail functions, and fraud detection to fill key compliance roles. Promoting from within requires formal talent management and development plans to continuously train on evolving laws and needed policies, monitor effectiveness, and promote junior compliance subject matter experts. Another incentive could include giving a new compliance executive some autonomy to resource and compensate his or her team. O'Neill adds that too will come at a cost. Banks should also consider hiring from the regulatory agencies that are responsible for monitoring compliance. Yes, that's a great one right there. The FDIC noted in its review of New York-based Signature Bank's failure in 2023 that it might need to pay examiners more, indicating a potential opportunity for financial institutions. While the agency reached a new compensation agreement with its staff in 2022, The average annual examiner base salary was 135,000, or roughly 60% of that of the average chief compliance officer. All right, let me pause there for a second on that one. So, um, should banks hire more? Yes, but I would also make the argument that people, I think, in that compliance job are definitely better compensated now than they used to be because of the demands of the job. And again, while they're sitting here saying that, like, oh well, the average examiner base salary was 135,000, or 60% of that of the average chief compliance officer. Like, yeah, but here's the reality. If I'll go back to the $1 billion bank example, if you've got six people working in your office and they're all making let's say they're all making six figures. I mean, that's $600,000 a year. And that's just salary. That's not benefits. That's not 401k. That's not all the other costs that goes into that. That's 600 grand a year that you're paying just for compliance. I mean, it is a huge, and herein lies the problem. And this is why this is what's driving a lot of the merger activity over the last 20 years in banking is that they can't, banks can't afford to pay all these compliance peoples for this. I mean, this is a cost to the bank. And while I totally understand that there is an absolute need for regulation, you got to have these regulations. You got to have laws in place. You got to, protect the consumer. You got to protect the customers. You got to make sure the bank is doing the right thing. And that is all totally understandable. But you do, I would argue that you do reach a point where you can have over compliance. You can have too much regulation. You can have so much regulation, and it can become so expensive and burdensome on smaller banks that they just can't afford to do it. And therefore that smaller bank is now going away. They're not going to fail, but they're going to be forced to sell to another competitor who might be in the same shoes. And they might be saying, hey, if we put this thing together, and we create a bank that's $2-3 billion in asset size, or maybe we create a $10 billion or larger bank. Now we have better economies of scale. We can better absorb the compliance costs and the cost burden itself. So there's a lot there to understand about that. So I just want to put that in there. So let's wrap up here with this. So there are also steps banks can take to ease the burden on compliance teams. One option involves retaining a part-time compliance officer. Doing so could help add capacity as needed. And then it says here at the bottom, nearly 90% of the compliance executives surveyed by Hummingbird said that they were interested in automated compliance processes that they could build and customize. And there are several potential pitfalls with AI, including algorithmic bias, regulatory pushback, and over-reliance on the technology for decision-making. A human analyst is needed to make decisions based on AI aggregated data. It is important to realize that regardless of hiring strategy, it could take considerable time to fill a vacant compliance post, and banks should draft a succession plan months or years in advance of retirement. Yes, all good advice there. And I would say, one of the hot areas in the tech space is an area called reg tech, regulation tech. Obviously, a lot of people keying in on one of the things that I will probably talk about in another episode is the time it can take to fill out a suspicious activity report or a currency transaction report. And banks are definitely looking at technology that can automate these things and can make try to automate part of the regulatory process and cut down on that burden, and obviously make doing these things a lot more effective and a lot more efficient for the bank. But there's a huge but there, and that is, can the technology deliver on what you're trying to accomplish at that, with the end goal in mind. So, and we don't know that. That's yet to be determined, but they're working on a lot of things, So I do think that eventually there will be more technology in place that will make it easier for banks to handle some of these regulatory burdens, to make sure that things are getting done in a very timely process, that things are being kept on, and so on and so forth. But again, I thought this was a really good article just because it got into here, what's going on with compliance And just so people can understand kind of some of the struggles there, like why the job is so demanding, why these positions can be so hard to fill, why there is, why the cost and the compensation. I would say, hey, if you're interested in becoming a compliance officer at a bank, like, hey, man, now's a good time, because you will learn a lot, you will get really good training, and it'll be a very good, well-paying job. It's just that, again, you see the pitfalls. A lot of people. I mean, what did she say here? Literally, she would rather be around death and loss all day than deal with regulatory burden. It's kind of funny, um, but yeah, I mean, that can be the pressures of the job. I mean, people can get, people. I mean, it can be very stressful. I mean, and certainly the bigger the bank you work at, the bigger number of problems that you have to deal with all the time in terms of just keeping up with the compliance and keeping everything rolling. So, but anyway, I hope people found this useful, and I hope people got a little bit of maybe a little bit better understanding as to just what's going on the compliance end of the bank, and what is just happening there in terms of the demand of the job, how you can potentially fill roles if you have to, and just maybe some good practices or things to look at. But I will finish with this. If you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Please make sure to leave your comments down below. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please make sure to go visit thebankernextdoor.com and check out some of the good things that we have going on over there. And then finally, please make sure to check out some of the other episodes I've got up on the YouTube channel, and look out for some new episodes coming this weekend. But I hope everyone has a great one, and I'll see everybody again real soon. Thanks a lot.